Excel accounting practice problem. Financial statements with every account included within them. Get ready because we're about to excel. Here we are in our Excel worksheet. In prior presentations, we put together the Excel worksheet from a blank sheet, now continuing to enter transactions into it. If you have access to it, there's two tabs on down below, an example tab and a practice tab. Practice tab starting out where we left off last time, the example tab in essence being an answer key. We're going to keep on here at the practice tab. We're going to be constructing the financial statements from the trial balance. We're going to be using the year-to-date trial balance, not the reversing item trial balance, to construct them. We will start out then by hiding cells AP and AQ. We don't need those cells to construct our trial balance. We're going to right-click and hide. So we'll hide those. And then I'm also going to hide the unadjusted and adjusting entries so that we just have our numbers. So from AL to AM, selecting those columns, right-click and hide them too. Now I'm going to hide everything until we get to the financial statements on the right-hand side, which we had constructed. So we got an outline of the financial statements, but we have included a few accounts as we have been going through the adjusting department. We will also go through and create the financial statements from scratch again after doing these adjustments. And when we do those adjustments, we'll think about the combining of some accounts that we might often need to do for presentational purposes when displaying the financial statements. And we'll discuss also, if you're using accounting software, what kind of those adjustments might be able to be picked up by the accounting software by using sub-accounts, and which of those adjustments might you still need to do a little bit more cleanup work even when using accounting software for presentational purposes to be more in alignment with standard kind of presentational type of goals. So let's go back up top. I'm going to go from HO and we're going to go all the way to the right till we have constructed our financial statements on the right-hand side. So there they are. There they are. So we're right here to J. I think I got another scheme, so I'm going to go to J, right-click and hide all of that stuff. So we had our financial statements we put together in a prior presentations where we had the balance sheet for the year to date, the income statement, and the equity, and then we did it again. The second one was just for the current period, or the 1 month. We're not going to do the 1 month financial statements. We're just going to focus this time on the year-to-date information for the balance sheet and income statement. So basically, we've constructed this already. We already have, in essence, our outline that we're going to pick up, and we're just going to add a few accounts. And again, we'll construct the whole thing from scratch in a future presentation, but I want to just look at this outline first. This outline is designed to basically be drawn from the financial statements in a similar way as accounting software can basically be put together straight from the data input and the general ledger type of activity. And notice that accounting software has a few other little tricks that it could use that could kind of make the reporting purposes a little bit different, like sub-accounts. But from a general standpoint, this is going to be kind of similar to what we would have in accounting software. And then again, next time, we'll try to take a step beyond that and say, what other kind of cleanup work might you do for presentational purposes for standard presentation? So again, we got the checking account. We've got undeposited funds. These are pulling over. We might actually go from here and use our little tool right here to see, is that one pulling over? It is. This tool, by the way, is in the data tab. And it's in the formulas tab. It's in the formulas tab. It's right here. And I put these into my quick toolbar up top so that I can use them. And then I'm going to say, I'm even going to include this 0. That's one of the things that we might clean up if we were to put this into our books, also into a more clean kind of format of financial statements. Also note, it's not typically the case that we want to report these items as checking account and undeposited funds, but possibly something like cash and cash equivalents, which again, you can't really do so much in a lot of accounting softwares oftentimes because it's going to be in there by the designation of the account type under the checking account, typically if you're looking at something like QuickBooks. So those are some things we'll look at next time to kind of clean up. This one is going to the accounts receivable, and then this one is going to go to the inventory. So all of these accounts are being picked up. We've got the short-term investment. That one is now at 0. Sometimes accounting software can kind of pick that up if you put an option on to say don't pull in 0 balances. but we'll keep the zero balances in our case because we're going to be using all accounts here, so we can see how we can construct this in Excel with all the accounts. And then we're looking at the furniture and equipment, which is pulling over. That looks correct. Remember that the furniture and equipment is one of those areas, the property, plant, and equipment, for example, that you might have different preferences on how you would set it up. So, and these are things that we talked about. You can, in accounting software, you can do a little bit more of this for the way the balance sheet will be constructed by using kind of sub accounts. So we talked about the idea that we might want just one, section for all the property, plant, and equipment and one account for accumulated depreciation, or we might want a separate accumulated depreciation account for each of the categories of the property, plant, and equipment, possibly tying out to the amortization schedule, possibly done in the tax software, and using that as basically our guide for breaking this information out. So in accounting software, you might make this like a parent account, and this is a sub account, and that would give you this kind of breakout of the furniture and equipment, and then the accumulated depreciation giving you the net of the two, which would then be the book value. So this is often an area that's messed up, that people don't do quite right or have problems with because of these contra accounts, which actually bring down the balance of the assets. And that's often something that throws people off when they're adding this to, and they're also kind of get confused as to how they want to display. How do we want to display the book value and the cost and so on? What's going to be the best format there? So we got those here. They're going to add up this way. So that looks good. And then we've got our total property, plant, and equipment, which is the sum of the two book values for the two categories that we have. Total assets then being the current assets and the property, plant, and equipment. I can double check each of these categories by taking and just adding up or selecting these items. There's the 133,756. Here is the 93,027. And notice how nice that is to do by having the credits be negatives here formula-wise. And then if I do the whole thing, summing up the whole thing, we get to the 226,783. So that looks correct. I'm going to undo all these, and let's do the same thing for the liabilities. I'm just going to go, all right, there's current liability, accounts payable, looks good. It's being picked up over here under the current liabilities. We've got the Visa. Now, the Visa is something that we might not put in place as simply a credit card. I mean, like a Visa, we might call it something like a credit card or other current liabilities or some generic category like that. If we had multiple credit cards, we might combine them together. You could possibly do that with accounting software by having a sub-account possibly to clean that up. And then we're going to say that this one is going to this one isn't included. So I got to have the interest expense. I'm going to add that here. I'm going to select these 4 rows. I'm going to right click or 4 cells and insert, shifting down, and then we'll just add that account into our liabilities. Into the liabilities, the interest payable, which you might call the accrued interest. I'm going to say negative instead of equal to flip the sign, picking up then that 73. There we have it. So then we're on the loan payable, and I've got those two, so that's being picked up here. This is another area where you might want, on presentation purposes, not to have 2 loans, the actual loans, possibly including like the loan number at the end of it. For external presentation purposes, you might be able to clean that up in accounting software by having a parent account, sub accounts that can collapse for external presentation purposes. We'll talk more, but we'll adjust that in a future presentation when we do the second financials as we condense them. The payroll liabilities, the sales tax, and the unearned revenue. So there is that stuff. And then we don't have yet the second long-term loan, which I'm going to put down here. So all the current liabilities are up top. Long-term liabilities due after a year's worth of time. I'm going to say negative, picking up that long-term liability. It being nice and easy to do so, given the fact that we broke it out in a separate account instead of us having to break those two things out as we construct the financial statement. So that's the one way you might do that. Say, oh, I'm just going to keep it in one account and then break out when I make the financial statements. So we got that. And then That gives us our current and long-term liabilities are here. We add those two up to give us the total liabilities. I could double check the total liabilities by simply summing up, just selecting those accounts. That adds up to the 8364, tying out to the 8364 here. Now next, I'm just going to take the full equity from our trial balance, which is really easy to do if you have the trial balance set up this way. And then I'll back into that by doing the income statement and the statement of equity. So in other words, this equity account, instead of taking it from the statement of equity, I'm just going to say negative sum of all of the equity accounts from here on down. And look how easy that is to do. Simple formula to pick that up because the debits are positive and the credits are negative. And you just use this negative sum formula and you pick up that plug, which is the 143,719, that matching out. So now my assets equal my liabilities and equity. So then I'm going to move to the income statement. Do the same thing. I'm going to hide from JS and scroll on over to JY, right click and hide. Let's hide that stuff and work on the income statement. So I'm going to do the same thing down here. We'll start in with the revenue, different kinds of revenue that we have up top. And this is another area where we could condense the revenue into one account, for example, or we might just have multiple revenue accounts on the income statement. And so we're going to say there's that one's going there. That looks good. This revenue account is going up top. This one is being picked up. Cost of goods sold is being picked up. So that then we have the revenue, total revenue, growth. Then we've got the cost of goods sold, and the difference between total revenue, cost of goods sold is that subtotal of gross profit. Then we have all the other expenses. Now we made some changes to the other expenses, like the bank service charge and the depreciation are two of them. The easiest way to pick that up is let's just delete this whole thing right here. Just delete that whole thing. I'm going to add a couple more spaces so that we have enough room for the new accounts. Right click and insert, shifting those cells down. And then I'm going to say this is going to be equal to, and we will pick up then the bank service charge. And I'll put that in KB10 equals the bank service charge of 35. And now note that that account is a pretty small one. So we could, as we're making the financial statements, try to condense some of these accounts. We might say, hey, look, I'm going to put some of those small ones into other expenses or miscellaneous or something like that, possibly. So we could do some more condensing if we so choose here. I'm going to grab that and then just copy it down to as many expense accounts as we have. We're going to go down to utilities. Now, I don't need these last two because these are going to go into another category of other income and expenses. So there we have it. I'm going to delete this last cell or this last row, putting my right click on it and delete that, moving it up, shifting up, put the underline here, going to say home tab underline, and then make sure my total's picking up the right column. Looks good. So if I double check my numbers here, if I went from the income down to cost of goods sold, that should give me my gross profit. That adds up to the 23,257. There's the 23,257. I then have all my expenses, which are going to be from the 35 down to the utilities. That's the 21,514, 21,514. So then we've got our net operating income. I can double check by taking everything from the revenue down to those expenses. 1743. So that's the 1743 here, which was my gross profit minus these expenses. And then we've got our other income and expenses, these being income and expenses that aren't part of normal operations that I'm going to put down in this other category. We're combining both the income and expenses. So I would like the income to be going up, positive numbers, expenses to be going down. We're picking up then our gains, positive number. I had to flip the sign with a negative of that number to make it positive. And then the expenses, negative of that number to pick it up as a decrease. Adding them up then, we've got the net decrease between the two of them. We then get our net operating income minus that other item, takes us to the 1324, which I could double check here by just selecting all of the income accounts. 1324, which we did down here with our check figure down here, and it looks good. Then we can go to our equity account. So the equity account is going to start off with the beginning equity, which is going to be this 77895, remembering that that is kind of the most confusing number on the trial balance, because the trial balance is as of the end of the period, but that equity number is really the beginning equity, because everything else is going to roll into equity, and that beginning equity you shouldn't have any activity in the equity account, or normally you would not, unless, say, investments, for example, or draws were posted to the equity account, which we did not. We posted those here. Now, note also the equity account should tie out to the prior period's, ending equity account. If it does not, then that would be an indication that draws or investments have been posted into it. You'd look into the GL to see if that is the case, or it's an indication that someone did something to the prior period. They deleted a check or voided something or something like that, and then you got to deal with that beginning balance problem. So we're going to say that's the beginning number, and then we got these two things that happened. Draws were taken out, and the owner put in $65,000. So we're going to say, okay, there's the investment of $65,000, and then we had draws. I got to add the draws. So I'm going to select these cells, right-click, and insert. Shift cells down, and I'm going to say this is going to be draws. Draws is here. And I'm going to make that a negative because it's going to be a decrease to the equity. So negative of the draws. So there we have that. So then this is our beginning balance. It increased by the $65,000 investment of the owner into the business. And then it decreased by the draws, the money the owner took out. And then we had the net income, which was down here from the income statement. That's the change in the equity. So we had the beginning equity and the change, which is an increase in this case. That takes us to the 143,719. I should be able to double check that by simply selecting all the blue accounts, which you'll recall we did when we looked at the balance sheet, 143,719. Now let's unhide the balance sheet, putting my cursor on the skinny here, going to J, right click, and unhide. I'm going to go all the way to the right to find my financials again. Find my financials. Where are my financials? So here's our balance sheet. We're in balance, assets equal liabilities and equity. This equity account, I'm now going to change, instead of pulling it from the trial balance, I'm going to say this equals from the equity statement. From the equity statement. Boom. We're still in balance. Still in balance. Didn't mess anything up, right? No. So then we got the income statement. Income statement down here. Getting bottom line, net income. That net income tying out to the statement of equity. The statement of equity. I'm making a statement about equity around here. So then if we sum this up, there we go. So there's our statement of equity. So you can see how those are going to tie together. So next time, we're going to start to make our financial statements, and we'll see, okay, some of those things we talked about grouping some accounts together and so on. We'll start to do that and see how we can do that in Excel, and try to think about what kind of things you can do possibly in accounting software to help you with the presentation purposes versus internal use of the financial statements, and what type of things that, even if using accounting software like a QuickBooks, might you still want to do to clean up the financial statements for external presentation purposes.